Good evening. Please come to the next part of this wonderful chapter, investing activities. That is, investment activities means acquisition and disposal of long term assets and other investments not included in cash equivalent. Example: purchase of property, plant, equipment, long term asset; sale of property, plant, equipment; purchase of tangible asset or intangible asset will come here. Even purchase of investment will come here, but in that investment should not be classified as cash equivalent. Otherwise, it will be duplication and your cash flow statement will not match. What about the interest and dividend? Interest and dividend. So, first you write a small note. Write a small note. Interest and dividend. Write a small note. Notebook, write down interest and dividend. For financial enterprises, interest paid and interest received. For financial enterprises, interest paid and interest received are to be classified as operating activities. Dividend paid is to be classified as financing activity. Dividend paid is classified as financing activity. For other enterprises, interest and dividend received classified as investing activity. Interest and dividend received classified as investing activities. Interest and dividend received is classified as investing activities. Interest and dividend paid is classified as financing activities. Write one more note. IAS 7. This is usually what they do, but IAS 7 provides an option. To classify interest and dividend paid and interest and dividend received. Interest and dividend paid and interest and dividend received as operating activity. So where will you put interest and dividend? If you're a financial enterprise, interest paid, interest received, operating activity; dividend paid, financing activity. But then there is an option to show interest and dividend paid and interest and dividend received as operating activity. Same thing for other enterprise also. Interest and dividend received, investing activity; interest and dividend paid, financing activity. But there is an option to show interest and dividend paid also in operating activities. So now we will solve one question. Check for this question at the end. This may be question number 3 in your book. Have you solved yesterday question number 3? 2 tak you have solved? Up to 2 you have solved? So solve this question number 3. You have to identify whether it is operating activity or investing activity from the following transaction taken from a private sector bank. So the important line, underline, private sector bank operating in India. Identify which transaction will be classified as operating and which would be classified as investing activity. So let us discuss. The answer is there. Let us discuss quickly. Interest received on loan. Can we show operating? Yes. Interest paid on deposit. Operating. Deposits accepted. Deposit accepted. Financing activity. Because bank needs funds so that they can give loan. So for them, deposit accepted, financing activity. Loan given to customer. Loan given to customer, that is their main activity. Operating activity. Loan repaid by customer. Operating activity. Deposits repaid. Financing activity. Commission received. Commission received. Operating activity. Banks receive lot of commission. Lease rental paid for various branches. Lease rental paid for, no, not investing. Lease rental paid. Operating activity. Most of these bank branches pay rental only. Operating. Service tax paid. Operating. All indirect taxes paid you put under operating. Then furniture for new branch. Furniture purchased. Investing activity. Implementation of upgraded banking software. Investing activity. Purchase of shares in 100% subsidiary for opening a branch in Abu Dhabi. Investment activity, because that is also investment only. New car purchase from Honda dealer in exchange of old car. Be careful. There is no cash involved here. Do we have cash investment here? New car purchase from Honda dealer in exchange of old cars. So we are not sure whether any cash is paid or not. So in your notes, the answer is investing, assuming cash is paid for the differential. Assuming cash is paid for the difference amount. Assuming cash is paid for the difference amount. New car purchased, old car given. So new car will be 15 lakh rupees. Old car may be 2 lakh rupees. So you have to pay some difference also. Assuming difference is paid in cash. Provident fund paid for the employees. Operating activity. Employee stock option issued. Issue of employee stock option will not involve any cash flow. So this is the answer. No cash flow. It won't come in cash flow statement. Now we'll come to the definition of financing activity. Financing activities are activities that result in changes in size and composition of the contributed equity and borrowing of the entity. Activities that result in changes in size and composition of the contributed equity and borrowings of the entity. Example, what can change the size and composition of the contributed entity? Issue of different types of shares. Okay. Buyback of shares. Then borrowing. Example, loan given, loan taken other than finance companies. Then deposits taken. Borrowing will include debenture issued, bonds issued, repayment of debenture and bond. And companies can also show, if they want, interest paid and dividend paid in financing activity. Otherwise, this standard also gives a choice. Interest and dividend paid can be shown in operating activity. Let us again give some examples. So come to this question at the end. Check for this question number, I think 4. So some examples on financing activity also. So now what they have done, they have given you 15 transactions and you have to identify out of these which one is operating or investing or financing activities now. Okay. From the following transactions taken from a parent company having multiple businesses and multiple segments, identify which transactions will be classified as operating, investing and financing. So issued preference share. Issued preference share, come on. Financing activity, tick mark. Purchasing the shares of 100% subsidiary. Louder, investing activity. Dividend received from shares of subsidiary. Dividend received from subsidiary. Investing activity. In bracket, right? Or oblique operating. Oblique operating, because operating is allowed. Operating is also allowed. Investing, but all dividend received can be shown as operating also now. In IAS 7, interest and dividend received can be shown in operating. So you write oblique operating. Investing is written there. Dividend received from other companies. Again write investing oblique operating, which is printed. Bonus share issued. No cash flow. No cash flow. Purchase license for manufacturing of special drugs. License means intangible asset purchased. Purchase of long-term asset. Investing activity. Royalty received from the goods patented by the company. Operating activity. Rent received from let out building. Letting out is not the main business. So what will be the building will appear as investment property. So rent received will be investment activity. So investment activity. Interest received from the advances given. Interest received from advances given. Operating activity is normally related to your business only. Advance given to supplier. He pays some interest. Operating. Dividend paid. Financing activity in bracket oblique, right? Operating. Financing oblique operating. Interest paid on security deposit. Same. Financing oblique operating. Purchased goodwill. What about purchased goodwill? Intangible asset acquired. Investment activity. Acquired the assets of a company by issue of equity share, not parting any cash, not a cash flow. Interim dividend paid. Financing activity oblique, right? Operating. Operating. Dissolved the 100% subsidiary and received the amount in final settlement. So we have lost the control. If you have lost the control over a subsidiary by selling the share, then it will come under investing activity. If the control is retained, only some shares are sold, then it is called financing activity. That we will discuss in the last segment of this chapter. Okay, now one more question for you. X Limited acquired machinery under a finance lease costing rupees 10 lakh. During the year ended 31st March 2017, X Limited paid an installment of rupees 3 lakh. comprising rupees 2 lakh interest and rupees 1 lakh as repayment of principal amount of loan. Question number 15. 1-5. Very interesting question. You have paid 3 lakh rupees under a finance lease transaction. 2 lakh is interest, 1 lakh is repayment of principal. How should the installment payment be reflected in the statement of cash flow? Finance lease means it is like a raising of funds only to purchase the asset. You paid 3 lakh rupees, 2 lakh is interest component, 1 lakh is principal component. So first you tell me what will you do with this principal component? Huh? Principal component will go to investment, correct? Because it is towards purchase of machinery. And then interest payment, you can show it as financing activity or you can also show it an operating activity. So your one answer is certain that principal portion will be treated as investment activity because this payment is towards purchase of machinery. Okay. Interest element would normally be shown as financing activity. You can just write a note that IAS 7 allows you to show interest payment in operating activity. Is it right? Okay, now on the screen, question number 23. A Limited purchase fixed asset from USA, or 22 in your book, for $50,000 on 1st October 2017. It entered into currency option contract for purchase of foreign exchange to pay for fixed asset and paid a premium of rupees 25,000. Okay. How will you classify such premium in cash flow statement of A Limited? There are 4 options. Choose the right option. One student is saying investing activity. Why do you think so? Because it is related to purchase of fixed asset. So your answer is right. It is investment activity. So in case if you hedge an underlying asset and that is investment activity, even the premium paid for hedging such risk will also be shown as investment activity. So the answer is investment activity. So here the standard says if you're hedging and in the process you are incurring some cash flow, then see what is the underlying transaction. If the underlying transaction will be recorded as investment activity, the cash flow related to hedging activity will also be shown in investment activity. So write one note there. Write a note below that answer, investment activity. If the underlying transaction is reflected in investment activity, if the underlying transaction is reflected in investment activity, the cash flow relating to hedging activity, will also be shown in investing activities. Done. Can term deposit be treated as cash equivalent? Can term deposit be treated as cash equivalent? No. What is term deposit? Fixed deposit for a certain time period. So the answer is yes, because these are convertible into known amount of cash and does not or not subject to insignificant risk of change in value. But one has to see the maturity period of the term deposit. Okay, right here in your note, this question is there, subject to the maturity period. Subject to maturity period. Or it is written in the paragraph 2 only, below cash and cash equivalent. Term, last two lines, term deposit that are convertible to known amount of cash and are not subject to insignificant risk of change in value are cash equivalent. So I think there is a drafting error, and are not subject to, make it significant, and are not subject to significant change in value. Either you write subject to insignificant change in value or write not subject to significant change in value. You can't have two negative in the same sentence. It will make it positive. Okay. What about bank overdraft, paragraph 3? Will bank overdraft be treated as cash equivalent? Under two conditions, bank overdraft will be treated as cash overhead. One is bank overdraft which is repayable on demand. Bank overdraft which is repayable on demand. Underline, this is first condition, and which forms an integral part of cash management activity. Which forms an integral part of cash management activity will be cash equivalent. Now, what do you mean by integral part of cash management? If you want to write one more line, if it is not printed. I think I have written there. A characteristics of such banking arrangement is that the bank balance often fluctuates from being positive to being overdrawn. So that is integral. Sometimes it goes up, sometimes it comes down, sometimes there is positive, sometimes there is negative balance, and is repayable on demand. In that case, this standard permits that you can show bank overdraft as operating activity. Okay. Sorry, bank overdraft as cash equivalent. But what about other cases? If this condition is not fulfilled, then it will not be shown as cash equivalent but as financing activity. Okay. If question is silent, what you can do? You can treat it as a financing activity, like you have done in your normal 12 standard questions. Okay. But if the problem says bank overdraft is used for integral cash management, then you treat it as a part of cash equivalent. As per this standard, there are three types of cash flow. That is operating activity, investing activity, and financing activity. The purpose is to divide your cash flows into three parts so that you can understand the significance of each of them. Operating activity tells us the performance of the company. Can the company convert their profit into cash? How much cash flow they are generating from day-to-day operation? Is the cash flow from operation positive or negative? Is the inflow from operation more than the outflows? Okay. And then if there is surplus here, then only you can use it for investment activity purpose also. And then where the money is being invested in the current year, are they buying fixed assets, selling fixed asset, buying investment or selling investment, is reflected here. And this last activity shows how the funds were raised during the year. Okay. So this gives you a good idea, a good summary of the cash flow related activity of the company for the year. Cash flow is the real thing. Profit is an accounting number. What the investor wants, company should be able to convert their profit into cash. In how many ways cash flow statement can be prepared? There are two ways to prepare cash flow statement. One is called direct method and one is called indirect method. Only the presentation of cash flow from operating activity will change. Presentation of cash flow from investing and financing activity will remain same. So that is why only for operating activity there are two methods. Does this standard allow you to follow both methods? You can follow either of the two. But again, one has to see what is the regulation in your country. Is it right? So some countries listed entities are only allowed to follow indirect method. So they will follow indirect method. In some countries, they may only ask them to follow direct method. Then will follow direct method. What is the difference between the two? In case of direct method, we will write in operating activity inflows and outflows directly from your day-to-day main operating activities. Example. Give me 4 examples of direct method cash flow. Cash sales, collection from debtor, cash purchase, payment to creditor, payment of all other expenses, taxes payment. That's it. Is it right? And if you want to show interest payment, dividend payment, then that also. So here we are writing exactly what is the inflow or outflow from various operating activities without any need to make any adjustment. If sufficient data is available for you in the question, then you can follow direct method. Gross inflow and outflow of cash are disclosed. And what about indirect method? Indirect method is basically followed by listed company so that one can show the link between the profit and loss and finally the cash flow from the operating activity. If you have done cash flow statement earlier, you will remember we will start from profit figure. We can either take profit after tax or profit before tax figure, okay? And then we'll add or we'll make 3 adjustments. Which are the 3 adjustments? Non-cash expense, changes in working capital, and the third is other items which are either classified as financing activity or investing activity. That means if suppose your P&L account includes, for example, interest income and you want to put it in investing activity, so you make adjustment in operating activity and you put that number in investing activity. Or your P&L account includes interest paid and you want to show it as financing activity, you'll make adjustment here and you will show it in financing activities. So these are the 3 adjustments that we make. Now the question the student will ask is, what is this changes in working capital? What is this adjustment for changes in working capital? And why do we do it? Profit and loss account is prepared using accrual concept. Cash flow statement is prepared using receipt and payment concept. Now you have to move from accrual system to cash system. Yes or no? So therefore this adjustment for working capital is done. It will convert your accrual system, which is P&L account, to cash system, which is your cash flow statement. So now you write down 4 things in your notebook. How are you going to make adjustment for change in working capital? You have to write in the notebook. Come on. First you write down name of the chapter, IAS 7, statement of cash flow. Then write down indirect method. Indirect method of reporting cash flow from operating activity, or just write indirect method, you will understand. And under that write down adjustment for changes in working capital. Adjustment for changes in working capital. Adjustment for changes in working capital. Serial number, particulars, impact on cash flow. Serial number 1, increase in current asset. So general rule for current asset, except cash and bank, except cash and cash equivalent, because that will be shown separately. Increase in debtor, increase in stock, increase in prepaid expense, decrease in cash flow. That means you deduct the difference between closing and opening balance. If their closing is more than opening, it has a negative effect on the cash flow. Decrease in current asset means closing balance is less than opening balance. Closing stock is less than opening stock. And if you are calculating cash flow from operating activity, add it to the profit figure. Okay. So add increase in cash flow. You can just write down minus plus. Increase in current liability, increase in cash flow. That means if you are given trade payable at the end more than trade payable at the beginning. So if trade payable is more at the end than trade payable at the beginning, means your outflow is less. Payment to creditor is lower than purchases made. Yes or no? Then only creditor balance will increase. So therefore it will increase your cash flow. And decrease in current liability means closing trade payable is lower than the opening. So your payment is much more than the purchases made. So decrease in cash flow. And one more, write down adjustment for non-cash item. Point number 2, adjustment for non-cash item. You can just write down 1 or 2 examples. There are 2 types of non-cash items which are debited or credited to P&L account. One, which are debited to P&L account, and second, which are credited to P&L account. So how do you know I have to add or less? If a non-cash item like depreciation or amortization or write-offs, different types of written off, if at all, any provision, loss on sale of fixed asset, these are the examples where there is no cash outflow, it's only a book entry. Profit is reduced, but cash flow is same. Profit reduces, cash flow is same, so I have to add back. And vice versa. If there are some non-cash item which are credited, profit will go up, but cash flow is constant. Reduce it, minus. Example, profit on sale of fixed asset, profit on sale of investment. Any excess provision written back. Provision written back is also a non-cash item. What I'll do, deduct from the profit. Okay. So these are the way you will do the adjustment. I'm sure you know it, but our task is to understand once again. Have you noted down? Good. Now no need to draw this format. I'm going to solve a question. When we will solve it, how to prepare cash flow statement direct method. We will divide into first 3 main heading: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. In cash flow from operating activity, we will read the problem carefully and we'll check the cash receipt from customer. If required, you prepare a memorandum customer account or customer account, write down opening balance, closing balance, sales, and the balancing figure will be collection. Or you can do plus minus and then get the figure. Okay. Then cash paid to supplier, cash paid to employees, cash paid for expenses, and therefore cash generated from operations, taxes paid, therefore cash flow from operating activities. Investing activities, few examples we have written: purchase of fixed asset, sale of equipment, interest received, dividend received. Take total, write in outer column. Net cash flow from investing activity. Cash flow from financing activities, some examples: proceeds from issue of share, proceed from long-term borrowing, repayment of long-term borrowing, interest paid, dividend paid. Take total, write in outer column. Take total of A plus B plus C. That will give me net increase or decrease in. Net increase or decrease in cash and cash equivalent. And therefore cash and cash equivalent at the beginning of the year. Cash and cash equivalent at the end of the year. This should tally with your statement of financial position. Otherwise, you will have to show one reconciliation statement. You have to prepare one reconciliation statement. That may happen if there is some foreign exchange gain or loss related to cash and cash equivalent items. So then the standard also says you have to ensure that this balance matches with SOFP. Otherwise, prepare a reconciliation statement. Why there is a difference? And what about indirect method? In indirect method, only part A will change. B, C, D, E, F will remain same. So what we'll do, we'll write net profit. Either we can write before taxation or after taxation. Accordingly, your adjustment will also be written below. Net profit after taxation and before OCI. Or you can write net profit before taxation only. If you write net profit before taxation, then don't add provision for taxation, if any, debited to P&L account. If you write after taxation, add back provision for taxation that you have made. And then you make adjustments. Some examples: depreciation, then operating profit before working capital changes, and then you write working capital changes item here: increase in debtor, decrease in inventory, decrease in creditor. Each and every item of current liabilities current asset and current liability you go through and write here. Take total. This will give you cash generated from operation, less tax paid. This will give you cash flow from operating activity. So this method reconciles your net profit with cash flow from operating activity. If this is very high, this is very low, it means you are not able to convert your profit into cash. Is it right? Now we'll do some practice on this direct and indirect method. So one good news, your question is printed in the book. One more thing is printed. Answer also. So first you search for this question. Can you locate this question? Question number 11. And we'll solve in the book only. Solve means you just check it in the book only. Or you want to write in notebook? No. Yes, this is a simple one. So this I can just check it directly there. Take a pencil and tick mark once we discuss that item. At the end of our discussion, all items in the inner column must have a tick. Is it right? So you quickly help me. Fadafat help me. Balance on 1420x0 50. Opening cash. Where will you write it? In the last second item. Cash at the beginning of the period. Tick mark 50. Issue of share. Financing activity inflow tick mark 300. Receipt from customer operating activity 2800, tick mark. Sale of fixed asset, investing activity 100 positive, not negative, sorry, inflow is positive, and this is the payment side. So all these are outflows. Write in bracket in the main answer. Payment to creditor operating activity, tick mark. Purchase of fixed asset, investing activity, bracket 200. Overhead expenses, operating activity, in bracket 200. Payroll, payment to employees, in operating activity, in bracket 100. Tax payment, operating activity 250, in bracket. Dividend paid, financing activity 50. Is it there? Tick mark. And repayment of bank loan, financing activity 300, tick mark. Cash and cash equivalent at the end of the year 150, outer column, tick mark. So just check whether all inner column you have ticked mark. Say yes. Say yes. Yes. Now take total of operating activity. Take independently. Is it total 250? Honestly. Take investing activity minus 100. Financing activity minus 50. A plus B plus C total. Is it 100? 50? 150? This answer is over. Now we'll try one more. Such easy question they have not asked. They will not ask also. This question number, search for this question. Is it question number 5? It is question number 5, right? Now this also we will try to solve in the book only. Don't worry. These are easy ones. Find out the cash flow from operation by direct method and indirect method from the following information. So this question we will solve 2 times, direct and indirect, and you will be happy to know that your answer is same. So my job is only restricted to finding cash flow from operation. Okay. So only the part A I am going to prepare. Only part A I am going to prepare, cash flow from operation. And this is the profit and loss statement. Sales, cost of goods sold, administration and selling overhead, depreciation, interest paid, loss on sale of asset, PBT, tax, PAT. And then there is a SOFP, shareholder fund, non-current liability, current liability, under that creditor for expenses, provisions, total. And we have fixed asset, investment, current asset, inventory, debtor, cash. Is there any adjustment also below? No, very good. Now we'll calculate cash flow from operating activity under direct method. Okay. So you listen to me carefully. Start with sales. What is the purpose of sale? To find out the collection from debtor. Based on the given data, what is the collection from debtor? Collection formula will be sale plus opening debtor minus closing debtor. So take on your calculator 5 lakh. Opening debtor you will find in the balance sheet, statement of financial position, debtor 7,000. Add 7,000. Closing minus 10,000. 5 lakh plus 7,000 minus 10,000. So in your answer book, answer tick mark. Cash flow by direct method, cash sale they have written 4,97,000. Instead of that, you write in bracket collection from debtor. This wording should be collection from debtor, receipt from debtors, or proceed from sales. Receipt from debtor is better. 4,97,000. Sale proceeds. Okay. Then you come to cost of goods sold. Wait, this is a dangerous item because student take this number and adjust the creditor. No. Using cost of goods sold, first we will find purchases. Formula for purchases. Anybody? Purchases formula. Cost of goods sold plus closing stock minus opening stock. COGS plus CS minus OS. What is COGS? What is closing stock? That you'll find in asset side. 12 or 13? 12 minus answer. And from purchases you will find payment to trade payable. Payment to trade payable will be purchases plus opening balance of trade payable minus closing balance. So take 3,49,000. Take trade payable from the financial statement. Is it 8,000? Minus opening. Take the balance. Is it 3,45,000? Tick mark in your answer below. They have written less cash purchases. You can write in bracket payment to creditor. Payment to creditor for goods. Payment to creditor for goods. Now we have administration and selling overhead. Now we have administration and selling overhead. So dear student, here also the student directly writes this figure in cash flow statement, which is not right. If in the SOFP you have either prepaid expense or outstanding expense, it means we need to adjust. So I will take this figure 55,000, add opening balance less closing balance. So you will find creditor for expenses appearing there 7,000 minus 10,000. So how much is the answer? 52,000, tick mark. Okay. Then depreciation will not come in the direct method. Interest paid will not come. It will come in financing activity. However, if the company wants, it may show it under operating activity. So this is a non-cash item. This is also a non-cash item. It will not come. Okay, and therefore profit before tax is over. Tell me the total at this stage right now. Total of 4,97,000, 3,45,000, 52,000. NG? 8 lakh? 8 lakh how much? Okay. And what about this tax paid? Deduct 30,000. Deduct 30,000. Is it 30,000 tax paid? So therefore your cash flow from operating activity. Hello, cash flow from operating activity is how much? 70,000. Is matching? In your book it is written cash profit after tax, or you can write cash flow from operating activity. Now you reconcile. The profit after tax they are showing is 53,000, but your actual cash profit or cash flow from operating activity is 70,000. Is it right? So you're able to convert all your profits into cash. Any query now? Now, dear student, we have to solve the same problem by indirect method. In indirect method, I will start from profit and make adjustment for those items which will require adjustments. So what is my profit after tax? 53,000, tick mark. And then I will move backward. Tax 30,000. Do I need to add back? I need to add back, but I need to deduct it also because I have paid 30,000 tax. Is the tax liability appearing in balance sheet? Some provision is appearing, but we don't know what is that provision. Is it right? So therefore, we will assume that provision is not taxation. So you can do two types of presentation. You can either add 30,000 first and then less tax. So what the institute have done in the presentation, they have not done anything because the same amount has been paid. Then move one line above. There are three items which will require adjustments. So add back depreciation 7,000, tick mark. Add back interest paid 3,000 because we want to show in other activity, financing. Add back loss on sale of asset, right? But for these three items, we have to calculate the working capital changes, yes or no? So now you come to SOFP, asset side, current asset. Inventory. What happened to inventory? From 13,000, it is 12,000 now. Decrease in inventory. Increase in cash flow. Plus 1,000. Tick mark. Plus 1,000 in answer. Look at debtor. 7,000 opening. Closing 10,000. Increase in debtor. Decrease in cash flow. 3,000 negative. Tick mark. What about cash? Cash will write at the end. Cash will not write here. Cash is not there in the profit and loss. Okay. So cash will not write in this working capital adjustment. Go to liability side. Two items we will take. One is this creditor from 8,000 to 12,000. 4,000 increase. Positive or negative? Positive 4,000, tick mark. Trade payable is over. Creditor for expense from 7,000 to 10,000. 3,000 positive. Add. Take total now. Take total of cash flow from operating activity. Is it matching? Is the total 70,000 matching? And is it matching with the direct method also? Yes. So that is the advantage of preparing cash flow statement. Both the method will give you the same answer if you solve properly. If you solve properly. Okay, you try one difficult one today. Come to this question. Search for this question. Is it 11 number or 10 number? 10. Question number 10. You want to try as homework or classwork? You classwork. Okay. Take your calculator first. Answer I have given, we'll just check whether it is right or not. Right? This time one or two adjustments are also mentioned below. And this time you have to prepare a full cash flow statement, not just the operating activities. Use the following data of ABC Limited to construct a statement of cash flow using direct and indirect method. Again, 2 times. Last practice for us. Then we'll not solve any bigger problem. Only some concept we will discuss. So this is cash. So we'll first understand direct method. Tick mark. Go to that cash flow statement direct method. Last two figures tick mark. 14,000 and 4,000. Take a pencil, tick mark, so that we will have a control that yes, this item we have checked. Done. Now there is an account receivable, means debtor. Come to sales below. Type on your calculator sales 2 lakh. Add opening data on your calculator 32,500 and minus 25,000. How much is that? Tick mark in your direct method. There is a first line, cash received from debtor. 2,07,500. Take a pencil, tick mark. Or you want to make a working note? No. Understood. Next. Prepaid insurance. See, in your SOPL, prepaid insurance is appearing 11,000. Insurance expense is appearing 11,000. And you have opening prepaid, you have closing prepaid insurance. So can you tell me how much cash was paid? How much cash was actually incurred? 9,000? 9,000. Tick mark 9,000. Then inventory. Wait, this inventory I will use for finding purchases. So type on your calculator 1,23,000. Add closing inventory 37,000 minus opening 34,000 equal to, that is your purchases. And in the liability side we have this accounts payable. Add opening 16,000 to that number minus 18,000 equal to, is it 1,24,000? Tick mark. Tick mark. So that will give you the payment to supplier. Cash paid for inventory purchased. Okay. Now we'll come back to screen. This is your fixed asset. 2,70,000 is opening and 3,16,000 is closing. What is the difference? 46,000. There is a note below. Last few lines. During the year 20x2, ABC paid 46,000 in cash to acquire new fixed asset. So where will you put the difference? 46,000. Investing activity, tick mark. Purchase of fixed asset 46,000, tick mark. Now accumulated depreciation is 30 at the beginning and 45 at the end. Only check in the P&L account, do we have a depreciation of 15,000? Tallied. No need to do anything more for depreciation. Asset total, accounts payable we have done. Now wages payable. Wages payable in the P&L account is 50,000. 50,000. And opening liability you will add 7,000 minus closing liability 4,000. How much is actual payment made? Is it 53,000? Tick mark. What happened to debenture? 160 became 173. So this is issue of debenture. 13,000, tick mark. Proceed from issue of debenture. Single tick. Then equity share 84 to 88. 4,000 issue of share, tick mark. And retained earning, wait, 60,500. And there is a net profit of 1,000, add 1,000. And there is a dividend paid 2,500. Is it matching with 59,000? But this dividend paid you have to present somewhere. Write in financing activity 2,500. Is it there? 2,500, tick mark in financing activity. Any query on the SOFP? P&L account, sales done, cost of goods sold, depreciation, insurance, wages, net profit. Dividend paid written, fixed asset purchase written. Now closing ceremony under direct method. First you tell me the total of cash flow from operating activity. Is it 21,500? Is it right? Tick mark. Fixed asset purchase 46,000, tick mark, outer column. Financing activity total in the outer column, check. Is it 14,500? Take total of all three activities. Is it telling? This was direct method. Now same problem we will solve under indirect method. Okay. Now what we'll do, we'll only discuss the operating activity part, because the other two will remain exactly same. So when you are solving under indirect method, you start with net profit first. So tick mark 1000 there. Indirect method, net profit 1000 figure, tick mark. And then you move above and check whether any item requires adjustment here first. Wages, insurance, depreciation. Add 15,000. Is it there? And for the other four items, sales, cost of goods sold, insurance and wages, I will go to SOFP and make adjustment for working capital changes. Cash will not adjust. Account receivable I will check. Is it up or down? Down. Decrease in accounts receivable, tick mark. Decrease in accounts receivable 7,500, positive impact. Then decrease in prepaid insurance 2,000, positive effect, tick mark. Increase in inventory 3,000, negative effect, minus 3,000, tick mark. Then fixed asset will not take, depreciation will not take. Accounts payable, increase in accounts payable, positive 2,000, tick. Decrease in wage payable, minus 3,000. And these other items will be financing or investing activities. We have done. Now tell me, what is the total of net profit plus depreciation and plus this working capital adjustments? Is it 21,500? Yes. Yes. Is it telling? It will tell you, because 21,500 is there in the direct method also. Remaining are same. You will be able to solve such simple questions. They will not ask. But it will be a part of a bigger problem where you may have to do this calculation also. So right. So our duty was to solve at least some basic questions so that we will have a good idea. So dear student, come back to your notes. Foreign currency cash flow. So there is a small correction also we'll do in the notes if it is requiring correction. Foreign currency cash flow means you are an exporter, importer, borrower, lender, and you have to make payment in foreign currency or receive in foreign currency. Second, you have a subsidiary and you have to consolidate the subsidiary's financial statement with your entity. So what is the exchange rate you will take for conversion purpose? So here the answer is very simple. The exchange rate will be based on the exchange rate at the date of cash flow. There is a correction required in your note, paragraph 11. In your paragraph 11, there is a correction. If required, do it. Cash flow from foreign currency transaction and cash flow from foreign subsidiary are translated into entity's functional currency, right, at the exchange rate at the date of cash flow. Exchange rate at the date of cash flow. Have you corrected? Why? Because we have to record whatever cash inflow we realize. So this we are talking about cash flow entry. So whenever you receive cash flow, at that amount it will be converted. And then second point, unrealized gains and losses. Means at the end of the year when we revalue the foreign currency based asset and liability, it will give rise to unrealized gains and losses. Like creditors restated at the closing rate, debtors restated at closing rate. These are called unrealized gains and losses arising from changes in foreign currency exchange rates are not cash flow. So what we will do for these items, in your book there is a third line also. However, the effect of change in exchange rate on cash and cash equivalent held or due in a foreign currency are presented in order to facilitate reconciliation of cash and cash equivalent at the beginning and at the end of the period. Now this question I will take in a while. What it is saying, if you have cash and cash equivalent in foreign currency, cash and cash equivalent in foreign currency is a monetary item. So what is the rule for monetary item? It will be revalued at closing rate. So it is possible that in your books opening cash and bank balance is appearing at 60 rupees per dollar and closing cash and bank balance is appearing at 65 rupees per dollar. And that is just because of change in exchange rate. So that will be presented in reconciliation. That will be presented in reconciliation. Otherwise your opening and closing balance will not match. So you have to write in the reconciliation, right? A question on that is pending in some time. Now what about income tax presentation? Standard is simple on this. Can you identify tax paid with a specific item of activity? Yes or no? Absolutely no. Sometime yes. Example, dividend distribution tax paid. If you are showing dividend paid in financing activity, dividend distribution tax paid will also be shown in financing activity, because here I can identify. One more example, land was sold, capital gain tax paid. So land sold will appear in investing activity. Capital gain tax paid on the profit on sale of land will also be shown in investing activity. So that is what they are saying. But what cannot be identified with any particular activity will be shown in operating activity. Okay. So there is a question also in your notes somewhere. Find out. X Limited paid an advance tax amounting to 5,30,000. Is it there? During the current year, out of the above, it paid rupees 30,000 for tax on long-term capital gain. Under which activity the above said tax will be classified in the cash flow statement? So where would you show the sale of what is that asset sold? Long-term capital gain. So means basically you must have sold some fixed asset like land or investment. Okay. So that will be shown in investment activity. So this 30,000 will also be shown in investment activity. Cash flow from arising from income should be classified as cash flow from operating activity unless they can specifically identified with financing and investing activity. So in this case, X Limited, the tax amount of 30,000 is specifically related with investing activity. Come to your book, next paragraph. Investment in subsidiary, associates and joint ventures. This will be required while preparing the consolidated financial statement. Investment in subsidiary, associates and joint venture. Financial statements in which investment in subsidiary, associate and or joint ventures are accounted as per equity method. Which method? Equity method. Equity method is a method where the carrying amount of investment is increased or decreased. for the investor's share in the change in net asset of the investee. So if you have made 20% share, investment in 20% share, add 20% profit to carrying amount of investment. If they have incurred loss, you reduce the carrying amount of investment also. So that is called equity method. Which chapter in our syllabus covers equity method of accounting? IAS 28. Okay. In IAS 28, you will learn equity method of accounting. So for the time being, you don't worry. It means just the carrying amount of investment is changed. Only the cash flow between the entity and the investee will be shown in cash flow statement. That means you are not going to record the transaction of associate or joint venture here. Only if there is a transaction between associate and joint venture and this reporting entity, associate, joint venture and the reporting entity, that transaction will appear in cash flow statement. Example, dividend from associate. One more example, right? Advances received, advances given to associate will come. Next is change in ownership interest in subsidiary and other businesses. You are a 80% stakeholder in a subsidiary. Okay. And then you sold the shares of subsidiary. When you sold the shares of subsidiary, you will receive cash. The question is, where would you put that cash received on sale of share in subsidiary? Investing activity or financing activity? So this standard says, check after selling the share, do you control the subsidiary or you have lost the control over the subsidiary? If you have lost the control, then you treat it as investing activity. Okay. So one of your investment has been sold. But if you do not lose the control, like out of 80%, you sold 10% share. Still you have 70%, still you have control. So this 10% share was sold to raise funds. This 10% shares was sold for raising fund. And therefore the standard takes a view, this will be shown as financing activity. Similarly, if you acquire the shares of subsidiary and it give rise to control, obtaining control, then that will also be treated as investment activity. So this is in SFS. In CFS also, whatever cash flow effect will be there, no? Subsidiary is not receiving cash. The owner of the subsidiary is receiving cash. It will come in the CFS also. Subsidiary is not, when is nullified? Nullification is not subsidiary. It is acquired from owner of the subsidiary. It is already a subsidiary. We are not talking subsidiary as issued share. Where we have purchased the share from? Another question. Achha, not this. Then it won't. Because see, cancellation takes place when same transaction happens in both the books. Here the transaction is not with the subsidiary. Okay, so now I understood your question. If subsidiary and parent are entering into a transaction, then it gets nullified. Now next question is non-cash transaction. Will it be shown in cash flow statement? Why? It is a non-cash transaction. Sometime in the question they add few adjustments, like bonus share issued, debentures converted into shares, or asset acquired by issue of shares. So you have to hold your commitment toward this chapter and don't make this adjustment, okay, even if they give such adjustments. Now there is a question which is there in your notes also somewhere. X Limited acquired, question number 8, X Limited acquired fixed asset of rupees 10 lakh from Y by accepting the liability of 8 lakh of Y and balance amount it paid in cash. How X Limited will treat those items in its cash flow statement? 10 lakh or 8 lakh or 2 lakh? Only 2 lakh, because cash flow statement only inflow and outflow of cash will be disclosed. So the answer is 2 lakh rupees will be shown. Next question, under which activity? So this is purchase of fixed asset. So that will be shown in investing activity. The remaining portion of this transaction, that is up to 8 lakh rupees of liability acquired and up to 8 lakh rupees of asset acquired, is a non-cash transaction. This will be disclosed in the notes. Non-cash transactions will be disclosed in the notes. Okay. Now we'll take a break.